LME Asia week has just wrapped up in Hong Kong, a key pulse check for the global metals market. From big debates on industrial demand to shifting trade dynamics, we'll break down the mood on the ground, the standout moments from the ever-popular metals panel, and how StoneX's outlook stacks up. Plus, with just months to go before London LME week and a major U.S. court ruling on tariffs, what's next for metals prices? I'm Johanna Bota, and joining me in the studio is StoneX's Senior Metals Analyst, Market Analysis EMEA and Asia, Natalie Scott-Gray. Welcome, Natalie.
Thank you.
So, Natalie, let's start with LME Asia Week, which just wrapped up in Hong Kong. Can you give us a quick overview of what the event is and also how the sentiment and the mood was in the industrial metals market?
Of course. So LME, or London Metal Exchange, is the global benchmark for base metal prices. And they have two main events a year. So the first one is LME Week, which is in London, normally around October. And then the one we've just had, which is LME Asia Week, which is based in Hong Kong around May. Now, both of these events, they draw in representatives from around the globe, from the entire metals supply chain. And really, it's a chance to exchange views for near-term outlooks, but also, of course, expectations for the future. I would say that the mood music was very optimistic for some of the metals. So here, particularly copper was a standout with quite robust fundamentals, likely to support prices for the majority of this year. But there was still a lot of uncertainty for the outlook for the other industrial metals, given the fact that we have such quick changes with trade policy at the moment, which is impacting the macro outlook. But also we've had downgrades to industrial growth outlook as well, kind of dampening expectations for demand there. Two things I would say that are noteworthy actually came from announcements from different exchanges. So the first one was from the LME itself, and then the second one was from the Shanghai Future Exchange. So the LME actually announced during the main seminar event, which is in the center of the week, that they're going to have an additional 3 warehouse locations based in Hong Kong. Now, given previous announcements this year, this is now a total of 7 new warehouse locations in Hong Kong. And really, it is part of the strategic move from the owners of the LME, which is the Hong Kong Exchange and Clearing Company. They bought the LME back in 2012, and they're really trying to open up access to mainland China. So from 2012 to where we are now, they're finally pulling the trigger on that. And then from the Shanghai Future Exchange, this week, they've announced 34 proposals on a host of the metals that they trade, so including copper and aluminium. And what the proposals really are is they're trying to allow foreign traders and other traders to have direct access to the exchange itself, because at the moment you have to go through onshore intermediaries. They're also trying to look at rules to change, so you could post margins in US dollars or other currencies as well. And this is another strategic move here from China and from the Shanghai Future Exchange, trying to increase their dominance in the global metals market, particularly when it comes to trading and also price discovery.
Try to make it a little bit easier, which might work in their favor. So I understand that one of the most popular events of the week is the LME seminar with its famous metal panel debate. So what were the key takeaways here, and how do their views compare to StoneX's?
Big question, really, because they go into depth of all the metals. What I would say is that there wasn't actually any shock announcements, from really the actual seminar presentations. I mean, when the audience was asked which metal do they think is going to be the best performer for this year, both before and after the debate, as we've seen for several years, copper always takes it. And so copper really is, as I've mentioned earlier, the odd one out against the rest of the base metals with quite robust fundamentals, while there's a lot of uncertainty for demand expectations for the other industrial metals. So if I just go through some of the key points that were made for each metal and compare it to what we think, starting with copper, the presentation had very, very bullish themes for the fundamentals. So here arguing that mine supply growth both this year and next year will be lower than what we had in 2024. This is set against an acutely tight copper concentrate market that actually has a record deficit this year of 1 million tonnes. And there's expectations that mine supply disruption rates will remain historically elevated, so above that 5%. And there's further supply concerns on the refined side. So there is building concerns for the outlook for refined copper unit availability outside of the US. And we've spoken about this in previous videos, but this is all surrounding the expectations. We're going to have 25% tariffs come in on copper going into the US.
Are we? As of today?
I still think it's likely for the sector-specific ones. I wouldn't rule it out.
Okay.
But of course, that we have a high premium in the US, so that's attracting units into the country, and it means that we have this scarcity on the refined side outside of the US. Further supply concerns are actually coming on the scrap side for copper as well. So the US was the largest exporter of material going into China of copper scrap material last year. So it was 20% of all of the supply that China imports for copper scrap, which is about a third of the way that they have refined copper output. A third comes from scrap directly in China. Because of the escalation we had between the US and China itself, when we had those 100% tariffs, export levels of copper scrap in March halved, and then in April fell close to zero. So there's uncertainty here on the outlook. Will we see trade resume to normal levels? Is it going to remain at these lower levels where we're not sure what's going to happen? So that's another supply concern. Meanwhile, demand in China for copper this year has been very robust on a year-to-date basis. So that was the arguments presented, and in our view, we definitely can't argue with the fact we have a very tight concentrate market. We also can't argue with the fact that there is tightness for refined copper units outside of the US. But where we have a slightly different view is we do see the copper market on the refined side in a modest surplus this year of 240,000 tonnes, not in a deficit. And also we're a little bit more cautious on the outlook for demand in the second half of the year, particularly in China. And the reason why we say that is in Q1, we had a lot of front loading of units coming out of China ahead of tariffs coming into play. We've also just seen the end of the peak demand season, which ends mid-May for copper itself. So for fundamentals, there is an argument we may have had the peak of the tightness in the micro story for copper, but we do see fundamentals overall as pretty supportive for the year.
What about aluminum?
Yes, so they were the two big metals really being addressed.
Aluminum and copper, got it. Okay.
Yes, and different views. So the speaker thanked Nicholas Snowden, who was talking about copper, for being so bullish because it enhances the substitution story for aluminium, which has been very big. The higher copper
Aluminium,
goes.
aluminum, got it. Very American versus British.
But I have to say, actually, the arguments made for aluminium were mildly bearish. So looking for a balanced market for this year, for next year, they were outlining demand concerns as well, that the best has already happened in China. We've already talked about front loading of exports. We've had the peak demand season for aluminium as well, but particularly in the case of aluminium, one of its big end uses is in solar panels. And there's been this rush of installation units because there's a policy change happening in China in June. So we think peak solar production has actually already occurred. It happened in April. So we do see demand from that significantly slowing over the rest of the year. And aluminium, unlike copper, is facing 25% tariffs since the 12th of March. And what this means is that Chinese exports last year accounted for about 800,000 tonnes coming out of China going into the US. And this is refined aluminium and aluminium semis. So now there's a question mark. Where's this 800,000 tonnes of material going to go this year? Will it be absorbed by other countries or not? So that's a little bit of concern about, again, a bit too much supply in the system. And although we had this very long-standing concerns that China is going to hit its 45 million tonne capacity ceiling that it set for itself in the country, It's still got very, very healthy imports of refined aluminium coming from Russia. We don't think that relationship is going to change in the near term. And also Indonesia is really being outlined as the next big growth driver, which will help to cushion the fact that supply within China will be slowing in the years ahead. And compared to our view, we're very much in line with that. We do think moderate demand for aluminium, rising supply is going to push the market from a deficit last year into a surplus this year.
Okay. And then we can move on to lead and zinc.
Yes. So here, I won't go into too much detail on these, but really the overarching theme is the downgrades that we've had to global industrial growth for this year is a negative for demand. And we do see that supply is going to recover, particularly for zinc, which has been very, very tight on the concentrate side. And putting those two parameters together, I think that price gains are likely to be fairly limited for these two metals. And it was certainly one of the more bearish presentations that we had.
And what about nickel, which I'm allergic to, by the way?
Oh, no. Well, you can add it to the fact that it's probably one of the most unloved base metals.
I bet it is.
Not only are its fundamentals, we're seeing increasing surpluses for 3 years out at least, but it has very weak investor appeal or appetite since we had the LME short squeeze in March in 2022. The only bright spot I think that was argued for nickel is the fact that because prices have fallen so dramatically, fallen below $16,000 per tonne so far this year, that is limiting the profitability for both miners and smelters, particularly outside Indonesia, but also within Indonesia itself. Having said this, kind of boots on the ground, we do understand those companies that are larger, that are integrated with mines, can continue to pump out pretty healthy amounts of nickel. And so in our view, we continue to see the market being oversupplied, and we do hold nickel with the least favourable fundamentals this year of the suite.
And last but not least, tin.
So tin is still our favourite metal for this year. It's been the outperformer so far, and that's because we've had a host of supply risks, and also it has a very robust demand profile. It's used in energy storage, renewable energy, artificial intelligence. Now, on the supply side, we do see some of the risks that we've had abating, particularly centralising around the fact that Myanmar, which is the third largest producing country, it is the largest exporter of tin ore into China. After a 20-month mining ban in the Wa state, its largest mine is now operational. Okay. We expect output to have started in April. And so even though it will take time to ramp up, we do see that the supply tightness will start to ease for tin. It still has robust fundamentals. We think that the market will be very balanced this year or remain in deficit. However, fundamentals are likely to have been more supportive in the first half of the year than they will be in the second.
With the event concluded already and less than 5 months away from London LME Week, how do you see the outlook overall for the metals in the months ahead, especially given the latest development ruling from the U.S. Court of International Trade blocking Trump's trade tariffs 2 days ago, and then it was appealed with current tariffs back on as of, what is it today, May 30th at 11:23 London time.
See what happens in the next
See what
minute.
happens. We have to put the ticker at the bottom.
So if we look to where we are with tariffs right now, then they all are remaining in place at least for a week. We may then see that tariffs that Trump set on the 2nd of April, Liberation Day, these reciprocal tariffs against all of its trading partners almost, they could be removed. And we could also see the tariffs that were set against the fentanyl trafficking removed. So that's 20% on China, the 25% on Canada and Mexico could be removed as well. But from our understanding, sector-specific tariffs, so that 25% on aluminium and steel and the 25% on the automotive market will remain untouched.
Those are not
in any
changing.
case.
Correct. Got it.
So looking at the impact of where we are for the metals market, the first thing to say is that there is a positive to take away from this because the risk of a sudden escalation in tariffs, particularly what we're looking at with the EU, has been removed for the very near term. But Trump does have options. Of course, he's appealing the ruling, and there's other mechanisms he might use. So he can use Section 122, Section 201, and there's a host of other sections he could look at. So just taking a step back, really, the latest developments, I think, are just adding to the tunnel of uncertainty for what the end game of policy is going to look like. And so for the macro front, if we take that, we couple it with the fact that we think the Federal Reserve will keep interest rates higher for longer. Their minutes came out yesterday. They have highlighted concerns about the delayed impact that tariffs have on inflation. So they're not going to make a decision and roll back. And the higher rates are, the more it delays our cyclical demand recovery. In addition to the fact we are expecting some weak economic prints over the next month, particularly from the US and China, because we have the delayed impact from when tariffs were 100% against each other. So really near term, macro-wise, we're still leaning bearish. And then on the micro picture, copper continues to be the favoured metal. There will be ongoing concerns about tightness for refined units outside of the US until we have a decision on whether tariffs are in fact going to go into play for copper itself. And if it takes the full 270 days, which was the executive order, then we're looking at November for a decision there. So tightness likely to remain over that time frame unless something else changes. Meanwhile, for the other industrial metals, the downgrade to industrial health, concerns about demand, weaker demand in China in the second half of the year, versus some optimism for rising supply, we think gains here are going to be somewhat limited.
Thank you very much, Natalie, for all your insight. And thank you for watching. For more financial content like this, please like and subscribe to our channel.